Hi there, everyone. It's Ifty from Extreme Returns. Today, we're going to be covering Etsy Inc. How good are they? Who are they? What do they do? Tell me all about them, Ifty. Before we do that, let's do the usual. If you're a regular subscriber, then you know what to do. My name is Ifty 𝙋𝙧𝙤𝙤𝙤. You can call me Ifty. I am a chartered management accountant by background. I've worked for big companies like Unilever and Mars Confectionery. I've done a stint in recruitment consultancy and headhunting. After many years in the corporate world, I decided to set up my own company, did a state agency, and became an entrepreneur. Most recently, I have done car-to-car, peer-to-peer car hire on Turo and also Getaround. Joined Etoro a few months ago. My stats are okay. This is the 5th month of stats. We're on the 2nd of March. US markets haven't opened yet. I was up by 15% in January and also in February, and the market's tanked. One day of trading has brought about nearly 5% of returns. I have at the moment 39 copiers. Thank you to all of you, and 260 followers. In terms of other stuff, I've got my YouTube channel. Please do go on there. And there is also, if you type in Ifty Uddin, my story, you'll come across this really cool cartoon I made. And also, there's a BBC interview as well. That's enough about me at the moment. Let's have a look at Etsy. This is from Stockopedia, really good site. I enjoy their coverage. I'm subscribed to a number of these sites. We're going to come on to another one called Seeking Alpha as well. But I like the layout and the ease of use. As an accountant, it gives me a lot of information I want in one place. So let's talk about Etsy. It operates a marketplace where people around the world connect online and offline to make, sell, and buy goods. The company offers a range of seller services and tools that help entrepreneurs start, grow, and manage their businesses. The company's community includes Etsy sellers, buyers, employees, partners, and investors. It's got a lot more than 1.7 active users now. And they're based in Brooklyn. I think that's New York. Very different to the rest of the high-tech companies that have got Silicon Valley as their base. So this is the kind of things that they do. You can see that. Good. In terms of their revenue, they started off very small at 196 million in 2014. I'm just going to make it bigger so you can see. And they just kept on growing, 273, 365, 441, and 604 in 2018. 2019, 818. Now, the 2020 figures are going to show, forget the 12-month trailing, about 1.6 billion. That's doubled in the space of a year. And next year, 1.8. So interestingly, this is one of those stocks that have really come into their own due to the pandemic. And you can see this number here, 33.1%, is a compound annual growth rate. It's the average revenue increase over the last few years. And that's fantastic. Anything like to keep on growing a company at that exponential rate is fantastic. And the other great thing I like about this company is look at the operating profit. It was almost break even in 2014, but now look, 271 in their latest reports. Even if you take last year, $90 million. Net profit, funnily enough, in this year, in 2019, was higher than operating profit, which means they've got tax rebates or interest or something, which is added back. But even on the net profit basis, they've been very profitable. If you look at their operating margin, it's been going up and up. I know that it went down slightly here between 2016 and 2017, but look at this, 12.4, 10.8, it's in double digits. And I think they're going to hit the 20s very soon. For a business to grow in terms of revenue and also an operating margin is very rare to see. But that's their business model, because as revenues increase, the profits increase at a higher percentage rate. And there aren't many businesses like that. So you can see the return on capital employed. Now, that just means how well they're using their money. So if you give them money, how fast can they turn that into a greater cash pile? And they're increasing. I mean, these rates aren't anything special: 3.5, 2.3, 9.4, 6.5, nothing special. But now I think they've reached a tipping point where their return on capital employed is becoming sufficiently large enough to say, let's get it, it's becoming impressive. Now, this is an interesting thing. I think the single most important indicator is free cash flow. Now, free cash flow, as you can see, there's the formula, but forget that. What it means is how much free cash is available, how much cash is left over to a business after it's paid for everything. That's the best way to understand it. And that's an oversimplification, but it gives you a good indication as to what it is. So when you divide the number of shares, you've got free cash flow per share. And you can see that it's always been positive. So net profit and operating profit have not always been positive. You can see these 3 years of negative net profit. In other words, they're making losses. But on the cash, now that's accounting. On a cash basis, they've always been profitable. Not only that, but their compound annual growth rate, look at that, 132%. That is unheard of. So this is another reason I like the company. Not only are they growing, they're growing more profitably than they're growing in the percentage terms. And even better than that, their cash flow, the amount of cash flow they're producing is phenomenal. One drawback, one thing I don't like, is that they're not giving a dividend. I think they're in a position to start offering something. And I've got a big beef about tech companies who are sitting on hordes of cash. In this case, look at this, 1.5 billion and not paying a penny in dividends. I don't think that's right. And that's a different beef with everybody who doesn't give dividends. Now, other things I'd just like to point out very quickly, the F score. Now, this is an academic who, as you can see, Joseph Piotrowski, I'll never pronounce it right, Piotrowski. And he came up with a simple list of 9 questions. And if you can answer, the more you can answer in a positive, the better the company is in terms of health. So is the company making a profit? Yes, it is. Is it generating cash? Yes, it is. Is it making more cash than reporting as profit? So profit here is an accounting term. Cash is simply just that. So it's always better to have more cash than profit, because this is accounting. This is real money. Is it more profitable than it was last year? Tick. Is the company's long-term debt reducing or stable? Tick. Is it increasing its ability to pay short-term debts? That's negative, and we'll look at that in a moment. The only negative on there. Is the company trading without having to raise funds from shareholders? Correct. Yes, it is. Is its pricing power improving? And we can see it is. So the more revenue it's bringing in, the higher percentage of profit it's bringing in. And is it more productive than last year? Easily. So in terms of financial health, it's got 8 out of 9. Now, here's another academic. His name was Professor Altman. He had something called a Z score, and it's been refined over time. It's called the Altman Z2 score, bankruptcy risk. So this is how can you tell if a company is likely to go bankrupt in the next 2 years? And because of this formula, it comes out that Etsy is safe. And the kind of questions, these are an oversimplification. There's a lot more to it behind this, but the basic questions the professor asked is, are liquid assets a significant proportion of the assets? They are, and that's what you want. Do reinvested earnings make up a significant portion of the assets? So it's regenerating its profits. and growing that even more, which it is. Are assets relatively productive in terms of earnings? They are. And does the firm value compare favorable to its liability? It does. The chances of it going bankrupt in the next 2 years is very low. This is the Benish score, the M score. Now, this is looking at the financial accounts and saying, what are the chances of it manipulating and hiding things? And it says that there's a very low risk of that. So in all of that, we get some really positive stuff. Some of the other stuff I just wanted to look at quickly. Stockopedia have rated this in the 94th percentile. This is historical. So what does that mean? Very quickly, the quality rank is ranking companies that have higher margins, profitability, and cash flow. And this is historical. It's not predictive. In the same way, value is simply looking at the value financial ratios. Things like this, the PE score, the price to book ratio, the price to earnings ratio, the price to sales, and price to free cash flow. So all of these financial ratios show that this is in the 11th percentile, which means, according to the stock market, Etsy is overvalued. Momentum is simply just that. It's got financial ratios and comparisons to the market in terms of, say, for example, the simple moving average of the 50 days, comparing it with other stocks. So looking in at that a bit more detail, the PE ratio is 101, which is really high, which means that this is expensive. So if at the next earnings call, they disappoint, they will be punished, even if they're profitable. It's all about expectations. And guess what happened? They released their earnings report just a few days ago, and the stock price went up by 15% in one day. And again, look at that, 11% just yesterday. So although it's expensive in PE terms, price earnings ratio terms, it's actually still hitting expectations. And look at that, 193% over 1 year compared to the rest of the market. So it's outperforming the market on a 1 month, 3 month, 6 month, and 12-month basis. And if you look at how the trend is going, so what this is just a 52-week high. It's actually an all-time high. It's just off that by 8%. 50-day moving average simply means that look at the stock average of that stock of Etsy, the average over the last 50 days. And you can see a trend, the moving average. Is it upwards or is it going down? And in both cases, over 50 days and 200 days, it's the trend is upwards. That's part of momentum. Let's look at a couple of other things. Balance sheet, we wanted to look at debt. So long-term debt, they didn't have any for a long time, but now they have just over $1 billion. There was something about short-term debt as well, wasn't there? Cash, but they've got so much cash, 1.2 billion here, and short-term investments. I wouldn't worry about short-term debt. The other thing I just wanted to come across is this. Now, as you can see, it's full of shareholders who are big fund managers. So Vanguard is the biggest, I think, or second biggest. Renaissance Technologies, that's interesting. That's Jim Simon's company. And he's the one that's why he's a very famous investor, legendary, in fact. I wanted to also go over to Seeking Alpha. Now, Seeking Alpha is another stock site, and somebody, who is it? It doesn't give a name, does it? DTF Capital came across. I came across DTF Capital. It said, "We are husband and wife passionate about common sense investing." And they came across this. So credit to them. I wanted to go through it. So the title is Etsy from Niche to Mass Market, the Best Transformation Story of 2020, an Extensive Review. And here's the summary. It's actually quite long. I'm not going to go through all of it, but I'm going to pick out certain parts. So what they say is Etsy is one of the best business transformation stories in 2020. It kickstarted with an unprecedented surge in sales for essentials and fashionable mask sales in March 2020. Today, Etsy is the go-to place for unique home furnishing and artisan products in other categories. Mask sales account for only 4% of total GMS. We go through how Etsy transformed itself so impressively. It's well positioned to over-deliver in 2020 despite headwinds from the economy reopening. Now, what they've said is that they've been wrong on Etsy before, but so impressed that they changed their minds. And further down, they go through some of the stuff we've been through already in terms of the revenues and the number of buyers, 82 million now, which is very impressive. But the total is 150. So how does that work? I think this is just a snapshot in certain time. Fiscal year 2020, it's gone up by 77%. A lot of habitual buyers coming back again and again, more than 6 times a year, and they are spending more than $200 a year. This was their biggest segment. So having what's called stickability and loyal customers. Let's make this a bit smaller so you can see. So this is just their growth patterns, the number of active sellers and how much they're selling per, how much revenue they're generating per seller. So in total, 81 million active buyers, 4.1 million active sellers came to Etsy to generate a total gross merchandise sale of 10.3 billion. So the GMS, or the gross merchandise sale, is not what's shown in the accounts, the published accounts, as we can see here. This is revenue after they've paid for their suppliers. So where are we? We're down here. And this graph shows the marketplace, how it's grown, and you can just look at that. See that Q1 2020? Wow, went up. So this is a real pandemic stock. I'm a little worried that when the pandemic's finished, what's going to happen? They won't be able to grow as fast. But I think they've got so much of a foothold that people will come back. And here we've already looked at gross profit, what they call gross profit. We called it operating profit. Adjusted EBITDA, EBITDA. Again, this is very American. If you look at different retail categories, it's not just masks anymore. They're looking at different categories. This one is homewares and home furnishing, which is their biggest. This is jewelry and personal accessories, which is 1.6 billion. Craft supplies, 1.2 billion. So the top 6 categories have grown by 85% year on year. And not only that, but they're expanding internationally. This is 70% increase domestically. And if you look year on year, it's 189% GMS growth, gross merchandise sales. And if you look at Germany, where they're quite big as well, it's 109%. So international was 41% of their total revenue. And this is talking about how they achieved that growth. Their business model is actually very good. And the amount of data they're collecting is quite interesting, because here it says Etsy improves the search capability so that buyers could filter millions of products to just a few. One essential part of the improvement was the AI, artificial intelligence capability that Josh Silverman explained in detail. It allows buyers to scroll through a few listings. So they're using cutting edge technology to help sell more product. And now it's not just pictures, but videos that are being listed as well. And you can see it was 211,000, but now it's 1.7 million per quarter. and this is the number that's been uploaded for the year. And they go through quite a lot of detail here. We don't need to go through as much detail as this, but look at this. This is an important part of the valuation. So the authors say that we believe Etsy is trading at a very reasonable level. For comparison, we look at pre-pandemic and during the pandemic valuations. So pre-pandemic, the company was trading at around 30 times. EV is enterprise value, FCF is free cash flow. So that's just one financial ratio. If you stick to that, 30, and then during Q2, it was 40. Today, it's still 40. So for more context, we look at how Etsy compares with other e-commerce leaders. So there's C, Mercado, and Amazon. So this one is C, and it shows 33%, 33.2. What are we looking at here? Etsy, this is Amazon, 3.898. And this one is Etsy, 19.81. So compared to Amazon, it's a lot higher. The 33 must be this the enterprise value over free cash flow, maybe? Yeah, there you go. EV to revenues, in fact. There you go. Enterprise value to revenues. So enterprise value, let's just go back to Stockopedia and explain it. So enterprise value is simply the latest available figures for debt and cash. So its enterprise value is less than market cap. The company has net cash. If enterprise value is greater than market cap, the company has net debt. It's always better to be in this category here. However, it depends upon the life cycle where the company is. So here's a conclusion. Etsy had a successful 2020 after the minor market sell-off in the past few days. We believe Etsy is trading at a more reasonable level for investors. This is a bit old. This is before it went up again. The future of Etsy is also looking incredibly bright. Successful business transformation should help the company to expand to other retail categories and internationally. Then it looks at their favored financial ratios. And that's it. Good. Well, thank you very much for that. I hope you found that useful. Just before we go, I wanted to give a quick plug for my wife, Adiba Dean, who's part of the Popular Investor Program. She deals only with developed Asia. So the kind of regions she's talking about is Japan, China, Thailand, Taiwan, Malaysia, Indonesia. Her stats are reasonable. There was a big drawdown in February, and she's made that up in one day in March alone. She's got a reasonable number of copiers, 1479 followers. Thank you to all of you. This is a good diversification as part of a good portfolio. So if you copy us, you can't go too far wrong. Thank you very much, and see you guys very soon. Take care and bye.